Thank you for joining us, America. We're so glad you are here. Dee is with us in Kansas City. Hi, Dee. How are you?
I'm doing well. How are you?
Better than I deserve. What's up in your world?
Well, I have a question. You know, I'm familiar with what you normally recommend for investments, and I've also heard you say the stock market's not great for money that you need in less than 5 years. I'm 63. My husband's 67. We have about $500,000 in retirement money, and I'm wanting to know if you have a blueprint for how to invest that money to last a long time and withdraw the money. I've been tapping the retirement income the last 2 months.
Yeah, you will not be withdrawing all the money within 5 years. You'll just be drawing an income off of it. And so I would invest that in good growth stock mutual funds like we always do. If you want to move toward, we usually say growth and income, aggressive growth, international, and a growth fund. If you want to make that a little bit more conservative, you can pull the aggressive growth fund out and do a balanced fund instead of that, and that'll make that portfolio a little more stable, a little less wild, so to speak. But still, the point is you're invested in good mutual funds, and off the $500,000 invested, you're going to live off of the income it creates, or you're going to tear into the principal and you're going to start cutting up the goose that's laying the golden eggs. So you want to do something where you can do that, and so you need to plan on living on. Can you pull less than $40,000 a year off and still live okay?
It's tight, but I pulled off $1,400 in November and $1,700 this month.
Okay, well that would only be $18,000 a year average.
Yeah, we have $1,500 a month in pension income.
Okay, well if you set yourself up $2,000 a month coming off of this, and it was invested like we're talking about, it would run almost forever.
Okay, so you think then keeping all of the $500,000 or virtually all of it in the 4 asset classes you described is a safe thing to do?
It's what I would do. It's what I do.
Okay.
I'm 55, and so I'm just right behind you here. So is there ever anything that's 100% safe? No, but when you bought your home, you don't have a guarantee. You just feel good about the investment over the long haul because homes have a good track record over the long haul. Mm-hmm. But you've got to research it, and you've got to feel good about it. I feel fine about that, and so it is what I have personally done, and it's what I've recommended for 25 years. And we were doing a millionaire theme hour yesterday, how to be a millionaire, and 2 of the millionaires said they started following that exact track several years ago, and and their mutual funds alone were over $1 million. The calls we took just yesterday. So it's not like I'm just some kind of wild, crazy guy out here on the fringes making up some kind of risky thing. This is a fairly conservative approach to investing, and so. Well-diversified, long track record mutual funds. And, this is not like we're playing single stocks. I'm not telling you to pick a stock. I'm not even telling you which mutual fund to pick. But those asset classes, as you called them, yes, that's the 4 I use. And if you wanted to make it more conservative, change the aggressive growth out for the balanced, and you'll be just fine, I think. And again, I think so, obviously, because I'm doing it for me. So it's not any different, really. Thanks for the call. Well, you guys would be so rich so fast and be able to do so much, not only for yourselves and for your family, but for others. We're debt free.